Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, good afternoon and thank you for coming on.
Good afternoon.
Well, stocks on New York were a bit mixed overnight ahead of earnings from major companies. The Nasdaq and the S&P rose to new highs, but the Dow is a little lower. A lot of analysts talking about signs of a bubble, but others saying the buying will continue. What's the story in the global markets?
Yes, if you look at the U.S. market, it was kind of mixed in a sense that it was showing a quite volatile session. But in any case, S&P 500 and Nasdaq booked the fresh highs as investors turned their attention to the earnings seasons, and the big tech reports are coming in a positive direction. On Monday, shares of Apple nudged up. The Nasdaq actually rose because of that with its quarterly numbers. On the fiscal side, the negotiation continues as the President Joe Biden tries to push through that $1.9 trillion U.S. dollar stimulus program that seems to be opposed by Republicans at the same time. On the pandemic front, hospitalization continues to trend down somewhat, but still quite painful, a very slow level. And vaccination seems to be rolling out as expected. All in all, if you look at the S&P 500, it jumped about 0.4%. Nasdaq was up about 0.7%. Looking at the valuations, the P multiple of S&P is running around 22 times. Historical record high number was 24 times, so therefore it is at very expensive territories. However, if you look at the historical 10 years average of interest rate, it is actually only a quarter of what used to be. So therefore, the P multiple expansion could happen even further. All in all, we think that the valuation being expensive is not a major issue at the current point in time. More important factor is the liquidity that you are seeing in the market, that M1 and M2 are growing at exponential level. We are looking at 72.3% year-on-year growth rate of M1, and for M2, it is rising at 27.3%.
Now today, the Korean market sharply lower, the KOSPI by more than 2%. The KOSDAQ with its tech stocks did break through 2,000 points for the first time in more than 20 years, since the dot-com boom, basically. What do you see happening in the local markets?
Yes, I think that the Korean market seems to be quite volatile, given the fact that it has been one of the best performing market in the world, followed by actually the number one was the Vietnam market, and Korea was somewhere around number 2, number 3 performance so far in the last 3 weeks or so. It has hit the over 3,200 level territories, but today it tanked by about 2%. I think that the people are concerned about the issues of short selling ban not removed going forward, that the regulatory environment is not necessary for positive direction. All in all, we've been saying that the Korean market needs to have risk premium reduced, and the issues was related to North Korea issues or regulatory issues or dividend payout issues or corporate governance issues. All in all, that seems to be actually improving. But still, nevertheless, right now, the regulatory environment is not necessarily that positive for the overall market condition in the long term. But in the short term, if short selling ban continues, then the domestic investors, the retail investors will continue to drive up the market. Today, if you look at it, the foreign investors and the institutional investors sold 4.2 trillion won of equity Korea, and retail investors bought all that back. So clearly there's a huge liquidity of retail investors buying the Korean market. If that kind of trend continues, we think that the market can go up even higher over the next several months.
Yeah, impressive volume today, Mr. Yu. Well, we're up against the clock, so we're going to have to leave it there for today and catch up later in the week. Thanks so much for coming on.
Thank you very much.